Even if you've been planning for your retirement for years and you've done all the right things, one major expense from long-term care can ruin your entire financial plans. And in this short educational video, I am going to explain to you just how important it is for you to implement long-term care as part of your overall retirement portfolio. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And the reason we make these educational videos is to help to make the difficult and stressful process of retirement income planning simple.
Yes, and we do this by providing our clients with a fully written retirement plan that's going to let them know when, where, and how to take money out of their retirement savings.
For the best retirement income advice, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
So the average cost of a private room in a nursing home is more than $100,000 a year, according to a new recent Genworth cost of care study. Today, a 65-year-old has almost a 70 to 75% chance of needing some type of long-term care at some point in their life. So no matter what you're doing for your retirement planning, long-term care has to be a critical part of your retirement portfolio. And I'm going to discuss how critical it can be in this short educational video today. But before we do that, as always, we always want you to know our 2 rules for retirement income planning. And what are those 2 rules, Andrew?
Well, rule number 1 is to never run out of money. And rule number 2 is to never forget rule number 1.
So now I'm going to share my screen with you because I think that, visualizing what we're discussing today is really, really important for your learning experience. So let's dive into why I think long-term care is so important for you to have for your retirement plan. So let's actually look at the risk of not having long-term care. You have a 1 in 96 chance of your house being damaged by fire. But all of us who own a home will have our home covered with homeowners insurance. You have a 1 in 5 chance of your car being damaged in an accident. But most of us will not leave home without any type of insurance on our cars. But you have a 50% chance that you would need some sort of long-term care at some point in your life. So why wouldn't you insure your independence? So let's talk about the cost of not having long-term care. 2/3 of single people and 1/3 of married couples will exhaust all of their funds just 13 weeks of entering into a nursing home. Within 2 years, 90% of retirees would be completely bankrupt due to some sort of long-term care issue. But what is the solution? The solution that we recommend for a lot of our clients is an asset-based long-term care. Why? Traditional long-term care does not compete the same with an asset-based long-term care plan. For one, unlike a traditional long-term care where you pay premiums every single month, and if you do not use it at some point, those premium dollars completely go away and they're just given to the insurance company. But with an asset-based long-term care, your benefits, no matter what the future holds, will be there. If you live too long, you need to use the cash value. If you quit the policy and need to and surrender the policy, you have money there. Or if you die, you have a death benefit with an asset-based long-term care plan. Plus, your premiums are guaranteed. They won't go up. They're going to be steady. So you have cash value growth with that. As I mentioned, a death benefit and a cash surrender value. If you're a married couple, not only can you have coverage for yourself with one policy, but it could be a second to die as well, meaning that if you die and your spouse is alive, they can use those same benefits. And if anything happens to that spouse, those benefits, as far as the death benefit, would go to your estate. And then you have lifetime coverage options. So a lot of long-term care plans have a certain limit to how long you can use it. Maybe it's 2 years or 3 years or 5. With an asset-based long-term care, you can actually have a continuation of benefits that will protect you from a catastrophic event for life. So let's show you an example here. This is just a hypothetical example of how this could work. We have a 61-year-old male and a 60-year-old female couple. So we're talking about them actually utilizing $150,000 of money that's either in their IRA. You can actually put money from an IRA that's not being utilized for your retirement, or if it's just sitting around in a CD, or cash, waiting for an emergency, this will be a perfect place for those dollars. So we take $150,000 and roll it over into an asset-based long-term care plan. Immediately, with this particular scenario, that $150,000 is worth $176,246 of death benefit to the family if anything were to happen. The couple here have an unlimited per month benefit of $5,287. That's for life if they were to get into a long-term care situation. So this is basically like insurance on your money. It's a must-have if you can actually afford it and you have the resources to get into a plan like this. So I hope that actually helped explain why long-term care can be a great asset value to your overall retirement solvency. You've passed another course with the Retirement Education Center. Please remember to make any comments or questions in the comment section below. And do not forget to subscribe to our channel.
Again, if you have any questions or comments regarding this video, please leave them in the comment sections below. After this video, please check out our other videos we created to help you maximize your retirement income. To learn more about our services and how we can increase your chances of not outliving your retirement savings, click on the link in the description below. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share with a friend. Thanks for watching, and remember, if you have questions,
we have answers.